Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. Hi, Manu. How's it going this week?
Hey, Paul. How are you?
Very good, thank you. What's in the news?
So just wanted to cover off something. We had a question in the comment section of last week's video about the impact of regulation on the future of DeFi and whether there was an over-reliance on essentially dollar-backed stablecoins. So very good question. And I think the future DeFi, looking at what's happening again, last week we saw the SEC coming after Coinbase. This week they're coming after Celsius. Why? Because they're not happy about Celsius's stablecoin lending and borrowing. So I think what's going to happen is you're probably going to see a lot of these businesses being run out of town. And whilst initially you might think that's great news for Canada, for the UK and Europe, it isn't, because ultimately our regulators will copy and paste whatever the US regulators do. So I think it's going to be a very challenging period of time for DeFi. Having said that, DeFi is going nowhere fast. And the reality is that if you look at the future DeFi, I think the future will be using algorithmic stablecoins. So just to make the distinction, there's two types of stablecoins. One is collateralized, such as USDT, that are basically backed by dollar cash or cash equivalents. Or in the case of USDT, we're not really sure what it's backed by, but suffice to say, let's pretend it is. with coins
what's money backed by is not backed by anything, is it? So
Well, I think there's a lot of commercial paper that I think last time I checked, 50% of the asset base of USDT was backed by commercial paper, which makes up their reserves. Essentially, are I think larger than certainly holdings that we see in USDC. And again, we may see a lot of commercial paper being held by Chinese companies as well, of those companies, which is not necessarily good in the current climate.
Yeah.
So that is basically the collateralized stablecoin. The algorithmic stablecoin essentially uses an algorithm to dynamically manage the price and the peg of that coin.
And what does it peg to? Sorry to cut in.
So it usually pegs to a fiat. So the peg will be, let's say, UST, for instance, which is pegged to the US dollar on a one-for-one basis. But instead of using cash and collateral to get to that one-for-one peg, it basically has an algorithm that dynamically manages the supply, increasing and decreasing that supply to keep that peg at a certain level.
I
keep
see.
it stable, basically.
Yeah. That makes sense.
So I think ultimately, several years from now, the future DeFi will probably be a reliance on algorithmic stablecoins, and we will probably see far less use of the collateralized stablecoins. But actually, that's kind of the whole point of DeFi. You can't regulate algorithmic stablecoins. You can't regulate DeFi. Ultimately, you will see this migrate to jurisdictions that are far more friendly. And as we've seen, obviously, from what's happening in Cuba recently, and more relevantly, I guess, in El Salvador, those jurisdictions are going to grow in number.
Right. Interesting. And
so yeah, very, very interesting question, certainly. And I guess just in terms of just my thoughts of what's happened in the last week or so.
Sure.
Very interesting. So we saw basically an attack on Solana last week, which is why we saw a little bit of a dump in the price. We saw a DDoS attack where someone or something decided to put through 400,000 transactions in one go, and the system fell over for about 24 hours. It's back up and running. It seems to be okay.
Price moved, but not as much as one would have expected, and there was a lot of downside pressure from the whole risk-on scenario anyway, wasn't there? So it did actually hold up really well.
Yeah, no, correct, absolutely. It did pretty well, and I think maybe that's because technically it's the mainnet is still technically in beta, I think, so maybe that's why the impact wasn't quite as profound. Interestingly, and I'm sure this is just a coincidence, but at the same moment in time that we saw the attack on Solana, someone also attacked the Ethereum mainnet.
I didn't know that.
Interesting. Yeah, and there was also another attack on a Ethereum layer 2 solution that didn't manage to shut it down, but certainly had some pretty negative effects. But I'm sure it's just a coincidence.
Can you explain what an attack, inverted commas, might be for the uninitiated?
Sure. So in the case of Solana, essentially it was the submission of a whole bunch of transactions, 400,000. The system couldn't cope with that, and it basically fell over. With the Ethereum attack, I believe that there was a participant that was essentially, they put through a huge string, essentially, of new code, and they tried to get other people to build on top of that block, and it was spurious. So it didn't really work. But the fact that people are doing this is a bit odd.
Yeah, so they're obviously just like stress testing it. If you were to be sort of I guess, take the positive side of it, maybe someone's stress testing it. If you take the negative side of it, somebody's actually trying to attack it to break it. But the fact that it's held up is also important to note. It hasn't been broken. It's very hard to break it,
No.
I would say. I mean, virtually impossible, I would have thought. But would it cost money to do lots of transactions? Is that because, as far as I understand, that's not free. It's not like spam email.
No. There would have been a financial cost of doing this. So whoever this was, if they're related, which they might not be, I'm not sure, would have spent quite a lot of money doing these attacks. But again, like I said, I'm sure it's just a coincidence. And speaking of coincidences, I don't know whether you caught Jerome Powell's press conference after the FMC meeting on Wednesday.
No, do tell.
Well, I didn't really listen to much of it because he just says the same old crap every time. But what was interesting was he was asked a question, and I thought it was a very interesting question, and actually asked by a journalist, which you don't see very much of these days.
Where are the journalists out there? But yeah.
Well, so I forget who this was that asked the question, but it was a very interesting question, which was about essentially asking for a bit of an explanation about the fact that there were some employees of the Federal Reserve that were basically buying assets or owned assets that the Fed subsequently purchased in size. And when I say Fed employees, I mean Jerome Powell and his municipal bonds that he bought just before the Fed bought lots of them. But the good thing is, it's not as if he decides what assets are bought. Oh wait, he does.
Oh, okay. So how did he answer that? That's
He said it was a coincidence.
It was a coincidence, of course.
Everything's a coincidence, don't you know, Paul?
Yes, that's right. Yes. Okay. So yeah.
And then I guess the final thing I wanted to say was
happy coincidence.
For
him.
it's certainly, so everything seems to be coincidence, I think. But the other thing I wanted to say was just about the Evergrande issue that I think has been making the headlines. First and foremost, I want to make it clear that again, we had a debt restructure yesterday, so they avoided an actual proper default because the creditors came forward, because there's 380 billion of outstanding liabilities, which is quite a lot. So this is interesting, but I think there's a bigger issue, and this is something that I don't think people are really talking about, which is the broader issue of the housing bubble we're seeing in China. So if you look at home ownership in the UK, it's about 65% of households own their own property. In the States, it's slightly higher, or 65, 66%-ish. In China, it's 90%. 90% of households own at least one house. Now, this is not great. And if you look at the conduct that we saw from essentially from Evergrande, basically what they were doing was they were a real estate company, but it didn't really make that much money. Therefore, they started a whole bunch of other businesses, including a financial services business, which certainly was a red flag to me early this year. Although weirdly, HSBC Asset Management and BlackRock added to their position in their bonds in August of this year. So I'm not quite sure what kind of diligence these clowns do, but yeah. Anyway, they've performed really, really badly.
Right. Yeah. Well, we can go over to the charts if we go to Evergrande, or Evergrande, as I've heard some people say. So for me, this is like, okay, if I was looking at every single stock out there and I had time to do that, this would have been a massive red flag as it broke through 9.76. So this had already topped out, made an attempt to rally, failed, and then topped out again, broke this support, and oh my goodness, did it fall like a stone. The other thing I would say about this chart is it hasn't actually reversed very much. So you will get people jumping in, either short covering or trying to say, oh, they're going to solve this problem, so isn't it time to buy? But this is very weak. I mean, we had a little bounce. Percentage terms, of course, it's massive. If you go from 2 to 3, it's obviously a huge percentage. So you could just buy it and then dump out on a one-day trade. But in terms of the long term, which is much more important, of course, this still hasn't formed a base, and it's not really formed much of a rally to suggest that people are excited about getting back in and the problem will be solved. And I think the best way to express what's going on there is, again, I know I was mentioning these Asian stocks in the weekly quite a lot, but there was a really good reason for that. They were going down. They were very, very weak and falling hard before this Evergrande story was out, when the rest of the markets were going up. So this was sticking out like a massive sore thumb. And I was trying to find, fundamental reasons. And there were some good fundamental reasons regarding, global tensions and perhaps how the CCP are perhaps not managing the economy as well as they could. I've heard some complaints about some of the regulation that they brought in and some of the problems that they've created there, which is obviously, a big factor in some of the companies, but it was moving down way before this. This suggests big problems. Are those problems over? No. So this is what we call a descending triangle pattern. And each rally is slightly weaker, and then the market will break through the low, the support. And this is usually what we call a continuation pattern, which means that the prior trend, which is down, should continue down. So still a lot of weakness in China and Hong Kong. It was spilling over into the very strong market of Taiwan. But actually, this is holding up pretty well. If you look at these lows are rising. So it's come off the high and the lows are rising. Now, if this can get through the high, I might pop this in the weekly for next week, because it is actually this. I would normally really like this pattern because it's forcing the market into new highs, and there's a lot of bearish information out there. So the Taiwanese market could be ready to break out, which would be very strange compared to the rest of the other markets. But why are we so focused on equities when we're also looking at Bitcoin and other crypto assets? The reason for that is because what you're seeing is a risk on, risk off situation. So when everybody panics, they start dumping everything. As we say, the only thing that goes up when the markets are falling is volatility. So if we start off with the VIX, again, the VIX has given us a very good steer because the lows have been rising while the S&P was consolidating or hitting new highs. That is not a good sign. It means somebody out there, maybe accidentally or coincidentally, is buying protection, and that protection is getting more expensive. So if you think of this as insurance against the market falling, for some reason that insurance is becoming more expensive. Now, there's a very nice technical pattern that I'm watching, and that's I think this might go into a head and shoulders reversal. So I know it might be difficult for you to see this, but what I'm looking for is this is the left shoulder. This whole area here is potentially a head, which is why I thought the VIX would dump, possibly come back towards this trend line, and then go back up again. Now, if you want a similar chart, I don't know why it's jumped like that, but let me just go back to it. If you want a similar view of what could happen once this is complete, so this is a very similar pattern we've got here. So the market went up, which it's just done. It comes back down again, which it's just done, and then we get a higher low, and then look at this explosion. So I'm concerned that we are close to, within a few weeks, of a major market move to the downside, a major lurch. Now, very short term, equities have had a big rally, and so the S&P's come right back up, and it's going right back up to that trigger level at 44.79, which triggered the move on the downside in the first place. But if it's weakened the bull strategy, it's sort of put a dent in it now, and that's of concern. We're looking here at the Nasdaq, which has again been very strong. It's broken this trend line, and the markets look like they're turning over. Now, where we identified the big weakness was in the Swiss stock market. If you remember, a few weeks back, we talked about this being a potential top, and I thought it might turn into a head and shoulders pattern by rallying from this point here up and then back down again. Now, it broke it, but of course you can't pick the levels exactly, but especially with reversal patterns. But that's still not looking bullish. That's looking bearish. That's really not a recovery by any stretch of the imagination. So if this is leading the way the rest of the market's going to go, of course the strongest markets will hold up the best. Or they should do. The Swiss market was one of the strongest markets. Now it's becoming one of the leaders on the downside. So something's definitely changed. So I'm concerned about this equity picture. I do think there's scope, obviously, for more rallies and a consolidation. But ultimately, I think it will fail. So I would be very, very careful. It takes us across to what's going on in the crypto assets. Of course, everybody's wondering what's happening with Bitcoin. And last week, there was the big talk about the dollar's weakening, and there's a golden cross apparently in Bitcoin, and it's bullish, which I didn't believe would have that much impact. And it hasn't really. It's still back into the range. I was thinking about this earlier, about what does one do when you're expecting this to consolidate. I think having a position of 0 in crypto assets is probably not the best idea. Having something in it is a good idea. If this ends up being a consolidation, then fine. And that's still kind of the primary view. We can't say that this is bullish. This line here at 53,500, 54,000, you've heard me talk about it a lot. When we break that, I'll be bullish. I've also put in this resistance line, which is capping all the gains. If it breaks that line, I will short term start looking at a potential move towards the 53,500, 54 level. So until that level gets breached, I'm not going to really consider the bullish scenario. I think the scenario is most likely to be sideways to down. And, I think some of the other coins are doing very well. Like you're talking about Solana, it's come off. It looks like it will consolidate, maybe even come a bit lower. But there are some more bullish looking charts out there than Bitcoin. But this itself, I think, could consolidate. But having 0 is probably not the best idea, even if it does go all the way back down to 20,000, because I think longer term it will go back up. So it's just a question of what the path is to this bullish strategy. Will it go all the way down and then do a big rally next year? Or is this it? Is it off to the races? Will it, kind of break my resistance levels and off we go? But either way, we're going to see some really big upside moves. It's just a question of whether we buy a bit more on the downside or whether we have to just buy an upside break. But we can't get excited about this price action right here, right now, because it's too volatile for a start. You have to literally watch it every day. It's swinging around 5%. That's too much to even, try and project out to 1 week because of, as I say, high volatility. And secondly, we are still back in this big range. So it's not come out of this. So if we go back to, Jan 21, the beginning of the year, if we take this high, if you bought it here, swung into profit, swung into loss, swung into profit, swing into loss. That's this whole price action. If we move it over to a monthly chart, you can see how this will simplify what's actually going on. Actually, probably a weekly is a better. It's got a better detail. See what's going on here. This is also potentially, and I haven't ruled this out, that this could be a double top. So we should really wait for it to fall back towards 2,800 as a trigger. But that is a possibility that I've not heard anyone else talk about. So a double top is when the market makes a major high, comes back down, tries to make another high. Sometimes it even makes a new high, but then swings back down again. And then it's only when it's near the bottom of the range does it complete. And when it breaks the low, we get a big move, a big correction to the downside. And if you want a context of how that can work before, this is what happened here. So we had a big double top, the market broke, and then eventually it moved up. Now this, in December of 2017 moving into 18, this was one of the reasons why I was bearish at this point, because the market made a small double top and that went into a major top, and then the market collapsed. But it's all still part of this. If we go back, it's still part of this upward trend. So the more we push back, the more you see that the trend is still upwards. It's just a question of whether we're going to get a correction first and then a move higher. So it's steady as she goes with those particular, or with Bitcoin, and Ethereum is pretty much the same. It has been consolidating, actually performing just slightly worse than Bitcoin, which is not what I expected. I expected it to outperform. So the overall view is the markets, as far as the majors in the cryptos, are going sideways. I think long-term the picture's bullish. We might have to be patient before looking for 100,000 plus. There will be a retracement at some point. Whether that takes us into very deep levels is still open to debate. And we're at a point where it's best just to play it week by week. But I'm not going to be overly drawn into either direction until the evidence in the market confirms it. So just one final thing with regard to bonds, which are so important. We heard that UK inflation was much higher than expected, and
that's a huge surprise.
Yeah, huge
wow.
surprise.
That came left field. No,
Yeah.
I wasn't expecting that.
Exactly. Well, this reminds me actually very interestingly of 2007, when we had the Bank of England wanting to raise interest rates because the price of oil had gone through the roof. And I was thinking, well, if the economy is going to be in trouble because of the subprime problem that we could see, there was stress and energy costs are rising, you're trying to actually put pressure on people because they're having to spend more money on energy. So the energy element of it isn't something that people can choose whether to spend or not. They have to. It's not a discretionary spend. So you're actually hitting people twice. You're putting interest rates up and the costs of energy go up. When costs of energy go up, the cost of everything goes up. Every single product becomes more expensive because it's got to be shipped. It's how it's made, how workers get to work. Everything goes up. So it's a hugely inflationary problem that puts a lot of pressure on the economy. So too much of that and the market won't like it. Now, but I didn't put Bunds in the chart pack this week because there was so much to look at, and I had to limit it to obviously to what I put in there. Otherwise it'd be like 20 pages long. But Bunds have been leading the way down. This was our trigger all the way back up at 175. Yields are still going up. For choice, we've been looking for a breakout of yields to the upside, and US yields are breaking up. So they've finally broken to the upside. So this is telling me that inflationary pressures that Manu's been talking about for a very long time will remain. And Michael Burry has been talking about inflationary pressures, hyperinflation coming in. He could be right. There's two big analysts on different sides of the coin. One's Michael Burry saying of the Big Short fame, saying that he thinks hyperinflation is coming. Cathie Wood is saying deflation is coming. One of them is going to be wrong, but as far as I'm concerned, I let the market tell me what's going to happen next. And the inflationary case has got the edge at the moment and is continuing to have the edge. That's the markets for this week. So we've had a rebound. I would just be looking out, in summary, for consolidation in the crypto assets, a potential another downdraft in the equity markets. If it all gets shrugged off and the markets move into new high, all well and good, but I don't think at this stage right now there is call for that much optimism. I do think you need to be very, very careful. And just to say, thanks very much for listening. If you have a view on Bitcoin or some of the other crypto assets or the equity markets, pop it in the comments. Do you think the market's going up? Do you think it's going to go down? Do you think the Evergrande scenario will pass over very quickly? Or do you think it's going to become a bigger problem? Let us know what you think. And Manu, thanks once again. Any final thoughts from you?
The only thing I was going to say was just in terms of Mike Burry and Cathie Woods, I think they might both be right, just on different timelines. I think ultimately we will see deflation, but I don't think that's going to happen anytime soon. I think right now the next 18 months is going to be some pretty serious double-digit inflationary issues.
Yes, that's an interesting thought, because technology is supposed to be deflationary, and we are in a technological age of a kind that we've never seen before. So there could be, in different parts of the economy, both inflation and hyperinflation, strangely enough. But I think you're right. I was speaking to a very smart analyst, a guy called Akhil Patel, and his view was that you normally at the end of a cycle see hyperinflation that occurs before you get deflation. So it would be more consistent that we see a move towards hyperinflation and then a reversal. Now, whether it's 18 months, 2 years, it could last a bit longer, not sure. And in that environment, the equity markets could still go up, funnily enough. It's just the actual purchasing power of your money would be going down. So in real terms, they could be going down. So interesting times ahead. Once again, thank you so much for listening. Thank you for your thoughts, Manu. And we will see you next week.